Make sure everything is everything. Mic check 1 2. Mic check 1 2. All right, there we go. We good. Good morning, Grand Rising. Buenos dias. Bonne nuit. I think bonne nuit is good night in French. I said that one wrong. It's not a good night moment. But anyways, welcome to the Ironworth Trading Show. I'm your host, Coach Price. This is not financial advice. This is for educational purposes only. All right. Nothing I say in this live stream is me telling you what to buy, when to buy, or when to sell. All right. This is just me simply teaching. What up, D? What's happening? How y'all doing on this beautiful Saturday morning? How y'all doing on this beautiful Saturday morning? Come on now, wake up, sleepyheads. What's happening? Lovely. That's what I like to hear. That's what I like to hear. So I want to give people a little chance to come on in. If y'all don't mind, give me a few seconds to let more people come inside the live stream. Probably y'all can help me out by sharing it to your story. Maybe share it to a couple of people you know that trade or need to trade or want to learn. All right, and also tapping is clapping, ladies and gentlemen. That pushes the live stream out to a larger audience, and it helps me out. So it's not just 4 people I'm talking to. You know what I mean? Even though I don't mind talking to y'all 4 people, but yeah, let's just get some more people inside the live stream. But yeah, how y'all doing? If you here today, that means that you chose to be somewhere that most people on TikTok, all right, they have no idea this place even exists. A lot of people slept in this morning, so they won't be here. You know, some people are scrolling. They got this brain rot shit that is being fed to them, and they stuck in a scrolling mode. A lot of people eating. Some people is doing absolutely nothing with their Saturday. But you showed up to a finance class on a Saturday morning. That matters. That matters. That is the first discipline, showing up when you absolutely don't have to. What up, Jazzy? Jazzy, what's happening? But again, before I get started, I got to be honest with y'all, right? Just showing up is the floor. It's not the ceiling. All right, I need you to literally participate today. Have your brain turned on. Hop up out the bed, turn outside, take a look in the mirror, say what's up. I need you to ask questions when some don't make sense. All right, this is not a damn podcast, y'all. I'm not just talking out the side of my neck. This is a fucking class. Let's treat it like one. Now, I'm gonna do 3 things for y'all. I'm gonna go through everything that happened in the market this week for the people that missed it. All right, Monday through Friday, so that you can understand the story. That's also what I got pulled up right here on the chart. I got this black area is Monday, this one is Tuesday, Wednesday, Thursday, Friday, and then the gray shaded areas is the overnight sessions and the pre-market sessions, okay? But yeah, I'm gonna tell you what happened so that you can understand the story that the market told us. Number 2, we are going to look ahead at what is coming next week. And I'm going to let y'all know how to prepare for it, because we all know proper preparation prevents poor performance. And then the third thing, really this is the one I'm the most excited about. We are going to do a lesson on back testing. I need y'all to know how to back test. I know y'all think y'all do. And yeah, and how to form a thesis. Some people don't know how to do that. They just trade. They get in, they press and buy, they press and sell, or they buying calls and they buying puts, and then they trade the P&L. They are not trading a chart. They're not trading price action. They just looking at how much they making or losing, and they getting out the trade. They didn't have a plan. So I want to teach people how to form a thesis and how to do some type of back testing. And we'll pretty much talk about what it means to study a setup before you trade it. And I don't want y'all walking into a trade without a thesis. That's like walking into a casino and betting blind. That's what you're doing. You don't know what you're doing. You're just going in there betting. You're a gambler. So by the time this class over, that shit gonna be over. You should be able to look at the market and say, I know what happened. I know what's about to come, and I know what I'm looking for. All right, so we're gonna get into it. I only got about 10 people in here, but that's all we need. We don't need a large class. It's Saturday. All right, so I know a lot of y'all already know what SPY is. Y'all already know what the S&P 500 is and why we track it. But I'm going to go ahead and explain for the people who don't know. When you dealing with the stock market, before I tell y'all what happened this week, I need to make sure that we all on the same page. All right, because some of y'all new. Even though I know a lot of y'all been here for a while, I want to make sure that this is completely locked in, right? So the S&P 500 is a list of 500 of the largest publicly traded companies in the United States. I want y'all to think of it like a grade point average of the American stock market, right? So when I say S&P 500 went up 1% today, basically on average, those 500 companies went up in value, but when it goes down, they went down. So we use this as like a measuring stick for the whole market. We use SPY as a reference point. So whenever you evaluating the stock that you own or that you want to own, the first question you should always ask yourself is, how is this stock performing relative to the S&P 500? Because that is called relative strength. Okay. Any stock you're looking at, you want to see how is it performing compared to the S&P 500, relative to the S&P 500. That is called relative strength. We will come back to that word in the near future. Now, the NASDAQ is a separate index. The NASDAQ is not the same as S&P 500. It tracks a lot more of the technology heavy companies like Apple, Nvidia, Google, Amazon, Meta. All right. So whenever technology is leading, the NASDAQ usually leads. You might see, if you trade the NASDAQ and you want the ETF version of that, it will be QQQ. You trade the Qs, or you might want to trade the Dow Jones. If I'm not mistaken, this will be IWM. So the Dow Jones is 30 large blue chip companies. They are older, they more conservative, and the shit moves slower than the NASDAQ. It's not the best measure of how the market is going, but it will tell you something about the health of the big, already established American companies. All right. And then we got the Russell 2000. That's an index of 2,000 smaller companies. We call them small caps. A small company is called a small cap. Small caps are, whenever the small caps are running, that means usually that the investors got confidence in the broader economy. But whenever you see them small cap companies lagging, that's your warning sign. All right. So y'all need to know all four of those that I just told y'all and you need to be able to look at them every single day. This is going to be your weather report before you leave the house type thing. All right. Now, let's start with talking about what happened on Monday. This right here, I don't know if y'all can see my mouse or not. But yeah, this is Monday. This is what happened on Monday. I could probably come down to a smaller time frame, but I won't. All right, so look, this is what happened on Monday. What will be on? We're on a 30-minute time frame. All right, let's see. Monday closed at record highs. At the moment, this was record highs, okay? Monday, that was the highest. That was all-time high on Monday. It closed the highest the market has ever been. And by Monday, we didn't even know all of this was on the way. See, in hindsight, it's always 50-50. It's always easy to look back and say, oh, man, it was, thinking you know what the fuck you're doing. But you're looking back. It's going to always be easy. I said 50-50. I meant to say 20-20. You're going to always be able to see everything that happened looking back, right? So the S&P 500 finished strong on Monday. Make sure I ain't out the way. Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, so this is Monday right here. Yeah, so yeah, it closed high, and investors was very optimistic going into a massive week of earnings. We knew that we was about to have earnings this week. All right, so I'm going to explain to y'all what earnings season is. I know a lot of y'all have never heard of earnings season, but this is critical. All right, so listen, 4 times a year, every publicly traded company is going to report their financial results to the public. They pretty much going to show you their report card. They're going to say, this is how much money we made. This is how much money we spent. This is where we headed. Okay, this is called their quarterly earnings report, y'all. Whenever a company beats what Wall Street thought they was going to do, the stock usually go up. Not all the time. Now, when a company misses what Wall Street said they was going to do, the stock usually go down. Not all the time, but it's the tricky part. Like I said, sometimes the company beats the expectations and the stock still go down. All right. And I talk about why that happens too, but I'll do that when I get to the thesis lesson. All right. But Monday set the stage because we knew that the biggest companies in America was about to report their earnings. All right. Alphabet. Now that's Google's parent company. We talking about Microsoft, Meta, which is Facebook, Instagram, WhatsApp. I'm talking about Amazon. And basically, we was waiting on Apple. We were waiting on Apple. All of them reporting in 1 week. The whole market was damn near holding its breath, ladies and gentlemen. That's what happened. Now, Tuesday. Let's move on to Tuesday. What happened on Tuesday? On Tuesday, the market pulled back. The S&P 500 fell about 0.5%. The NASDAQ fell almost a full percent. And the reason was a single news story is what brought all of that action. The Wall Street Journal reported that OpenAI, the company behind ChatGPT, I know a lot of y'all know what ChatGPT is. Maybe you didn't know OpenAI owned it. All right. Now, they missed their own internal targets for revenue and new users. They didn't make as much money as they said they were going to make. They didn't get as many new users as they said they was going to get. The report also said that OpenAI's CFO expressed concern about whether the company could afford to keep paying this massive ass computing contracts if they not going to make money real fast. All right. Now, what I need y'all to understand, OpenAI is not publicly traded. Me and you cannot go and invest inside of ChatGPT. It is a privately owned company right now. You cannot buy a share of ChatGPT today. You can't go buy a share of OpenAI. But so many companies like NVIDIA, Oracle, Microsoft, CoreWeave, all of these companies are deeply connected to OpenAI, right? If you want exposure, but it's because they supply the computing power and the microchips and the cloud services that OpenAI uses to run ChatGPT. So when OpenAI looks shaky, all of those companies are going to feel it. Are we clear? So that's what happened Tuesday. NVIDIA and AMD both dropped between 2 and 5% on Tuesday. Oracle dropped more than 5%. CoreWeave, which is one of those newer cloud companies, but that dropped about 7%. Even Japanese stocks was dropping. All right, now on the other side, General Motors had a good day on that day. They reported a strong first quarter earnings and raised their guidance for the year, meaning they told the market, we expect to do better than we originally said we was going to do. And guess what happened? The stock popped more than 5% off that information. Coca-Cola also beat their earnings, went up nearly 4%. Anybody in the chat love Coca-Cola but don't own any Coca-Cola stock? Your mama been drinking it, your grandmama been drinking it, your great-grandmama been drinking it, but you don't. Hey, listen, when you gonna get some? Get some. Y'all eat McDonald's and don't own no McDonald's shares. Let's make it make sense, y'all. Y'all got iPhones and don't own no Apple shares. You wear Nike but don't own no Nike shares. Huh? You spend a lot of money at Target but you don't got no Target shares. You know healthcare important but you ain't invested in that. Some of y'all saw cell phones and computers advance from levels unimaginable to where they are now. And you still ain't investing in it. From the moment they started, you saw the big block phones, you saw the Nokia phones, you saw the flip phones. You watched all this shit advance, and not once did you say, let me go ahead and invest. Well, that shit is over with for you. You're not doing that no more. Now you're going to wake up and pay attention to what's going on around you. All right. Let's not make the same mistake twice. We're not going to do that. We're not going to do that, y'all. We're going to wake up and make shit make sense. So, like I was saying, that's the lesson from Tuesday. This is the lesson from Tuesday. One negative story about one company that is not even publicly traded sent shockwaves through the entire sector. That is how connected everything is, y'all. You can't just watch the stock that you own. You have to watch the ecosystem that it lives in. All right, any questions? What up, JoJo? Good morning. Anybody got any questions? So that's what happened on Tuesday. Wednesday, April 29th. Where is that at? Where is April 29th? That's the next day, the very next day. So we were trading inside this range. As soon as it went inside this range Tuesday, we didn't break out this range Wednesday. We didn't break out that range until Thursday. But let's talk about what happened Wednesday before I get to Thursday. What's the question? You trading shares or options? We do both, Brady. We do both. But it's Saturday. The market is closed. Where do I find info on these companies? Hayden, on their websites. On their websites, the brokers you trading on, the brokers, they sometimes give you information on the company that you trading, but it's public information. You could just do a simple Google search or a Chat GPT search, whatever AI system you use, and that'll help you too. They'll do extensive research for you. Now, Wednesday was the Fed day. All right. So a lot of y'all, who can tell me why the Fed day is important? The Federal Reserve. That's what the Feds. When I say Feds, I'm talking about the Federal Reserve. Anybody know why it matters? Why do we care about what the Feds say? If we investors or day traders or swing traders. Somebody said interest rates. Help me, someone. Mario, you in the right spot. Inbox me. Rate cuts. That's right. That's right, y'all. The Federal Reserve, the central bank of the United States, they do not buy and sell stocks. What they control is the interest rate. The interest rate is the fucking cost of borrowing money. When the Feds raise the rates, borrowing will become more expensive. When they lower the rates, it becomes cheaper. Now, I know y'all like, bro, we don't care, but I'm going to tell you why this affects the stock market directly, because you should. When borrowing is cheap, companies get to take out loans, they expand their businesses, and then they hire more people, some of y'all, right? And then they invest in growth. That is good for stocks. Whenever borrowing is expensive, the companies slow down, they cut costs, they hold back. That is bad for stocks. Most importantly, when the interest rates is high, investors can get decent returns just by putting their money in a savings account or by buying something called government bonds. I know a lot of y'all heard of stocks and bonds, but you never understood the bonds part. Okay. Basically, they putting their money in safe options. So they pull their money out of stocks, and then basically that's pressure on the market. And on Wednesday, the Feds announced that they was keeping the interest rates unchanged. Are we clear? We all caught up? Now, the current Fed funds rate, that is the benchmark rate, is at 3.75%. They held it there. I said Jerome's in the house. Ooh, ah, ooh, ah. Jerome Powell, my boy Jerome. Jerome, the Fed chairman. He is leaving his role as the chairman on May 15th. He gave a press conference where he confirmed he would stay on the board of governors while building a renovation investigation. We are in trouble now. Why? Because Jerome leaving? We in trouble because Jerome leaving, JoJo? So yeah. Also, it's a building renovation. That's what's happening. But anyways, the markets went sideways on Wednesday. You can see that. You can clearly see that's what happened. It fell into this zone Tuesday, and it went sideways on Wednesday. The S&P 500 was basically flat. The Dow fell slightly. This is for the people who didn't get to trade this week, or maybe you wasn't paying attention to the overall picture. I got you. The NASDAQ was flat. There was news underneath the surface that matters, all right? The GDP report came out. Does anybody in the chat know what the GDP is? How do you read the chat? Simply Nail says, how do I read the chat? I'm looking, I have a widget with all of you guys' comments popping up right here on my screen. So I can see everything y'all saying. Oh, you talking about the chart. Well, you start by learning what a candlestick is. You start by doing a little homework. I think it'll take a person all but an hour to figure out how to learn how to read a chart. And if not an hour, a day, a weekend, dedicate a week to it. But the information is public information. It is literally everywhere on the internet. You can't miss it. All you got to do is just type in, how do I read a candlestick chart? They actually taught us this in school. Yeah. See the numbers down here at the bottom? They represent the time. Don't turn this into no beginner's masterclass simply. I was trying not to do that. But look, the bottom is a time. This is the time. So the right side of the chart is price levels. So it's telling you what time and what price the commodity or the stock or the derivative, whatever you're trading, whatever. This could be a chart to see how many jumping jacks you did. Right? On this day, you did this many jumping jacks. And then this day, you did this many jumping jacks. Then this day, you did this many jumping jacks. Like, it's just a chart. A chart gives you information. There's many different types of charts. There's many different types of graphs, line graphs, bar graphs, pie graphs, etc. Some of y'all was chewing gum in class and sending love letters when they was trying to teach us this shit in school. I ain't talking about you, though. I'm just saying. Looking at the weekly chart, I now see several head and shoulders. Says TLC. But anyway, y'all, where was I at? Wednesday. Yeah, they was spitballing. Yeah. The GDP report came out. The GDP stands for gross domestic product. This is the total value of everything that the country produced. That's right. They pay attention to this type of shit. 2% growth tells us that the economy is not collapsing. It is moving forward despite the war, despite oil prices, despite $5 a gallon at the pump, despite everything. All right. So for y'all, some of y'all is $7. But anyways, Wednesday, all right. Also on Wednesday, 4 of the Magnificent 7 reported earnings after the bell. Google, or Alphabet, which is Google's parent company, Microsoft, Meta, and Amazon, all of them reported on that day. So the results were largely positive, setting up for a strong Thursday. All right, that's set up for the strong Thursday to pop off. Look at this. Look at this game. That was a rare event. Yes, it was. You don't see that doesn't happen often. Where's my? Oh, it's in my hand. But yeah, that's what set us up for Thursday. Now Thursday, April 30th. Let's look at that. Let's go there, because this is Friday. This is Thursday. So we went up almost damn near 2 days in a row. But let's talk about Thursday before I go to Friday. This was the best day of the week for most of the sectors. I don't know about y'all, but you should have made a lot of money on this day. All right, let me give you an example. If you got in a put here, you should have got stopped out. But at what point do you realize it's going the wrong way and you were wrong? All right, if you realize it here, you still could have got in and made money. If you realize it here, you still could have got in and made money, got out and got back in and made money. If you realized it here, anywhere here, sometimes you have several opportunities to realize you're wrong about the direction. Stop. I don't know who needs to hear this. Stop losing 100% of that position. Stop entering a trade and then you lose everything that you put into that trade. I'm going to tell y'all something else too before I continue. There's a big fucking difference between leverage and risk. Okay? Leverage and risk, two different things. See, I will leverage $1 million, right? I'll leverage $1 million on a trade, but I'm not risking $10. This is me giving you an example, a hypothetical. All right, let's say I'll risk 1,000. Okay, I'll risk 1,000. That means if I get in a trade with $1 million, my leverage was $1 million. I put $1 million on the trade, but if it goes the wrong way, I'm walking away with $999,000 still. Okay, that's the difference between leveraging and risking. You pay $200-300 for that contract. That's leveraging. You got $200-300 on the line, but you shouldn't be willing to risk. What the fuck? You shouldn't be willing to risk 50% of that. You shouldn't be willing to risk 100% of that. That's crazy. At some point, you're wrong. Get the fuck out the trade. All right. I don't know who needed to hear that, but I want to make sure I repeat that to you, because a lot of y'all, that's what's stopping you from being a winner, is you're taking very big losses that you can't afford to take. Trust me. I know. All right. Now, yeah, that was rare. So Thursday, April goes out with a bang. April 30th. Thursday was April 30th. This was the best trading day. So how can I put this? The S&P 500 and the NASDAQ both hit all-time highs again. So in April, let's put it in context because this is important. The S&P rose 10% for the month of April. NASDAQ climbed 15%. The Dow rose 7%. That is the best monthly performance since 2020. Y'all didn't know that though, did you? Did y'all know that? Just like on some COVID 2.0 shit. So you were sitting in April of 2026 during a historically strong month for the stock market. You need to understand and understand that, y'all, because your duty as a trader, your job as an investor is to know when you are in a good environment and know when you are not. And if you do, you'll be able to position yourself accordingly. Are we clear? Drop a W in the chat if y'all get what I'm saying. You feel me? Either that or tap the screen. I need to know. While I'm yapping, I need y'all tapping. See what I'm saying? Tapping is clapping, y'all. Tapping is clapping. I know it's early in the day. Some of y'all got to go get your coffee or your bagel or, whatever it is you get to get you going. Energy drink or protein shake or whatever. Wake up, though. Wake up. You can go back to bed after I get off TikTok. Wake up. Wake your ass up. All right, anyways. They like, who you telling to wake up? There's somebody in here that need to wake up. They need to snap out of it. Tell you some things we don't know. Jay Bandit says, tell you some things. What you mean? Fair Trading says, give me number. Y'all form complete sentences, please. Tell us some things. Well, Jay Bandit, if you hear something that you already know, you know what I'm saying? Cool. But I'm pretty sure if you stay around, you're going to hear some shit you didn't know. That's at the end of the show. Right now, I'm just going through what happened throughout the week. So that right now, y'all got to understand that why this week, why Thursday was so strong. Why was April so strong? What happened in April to make this shit pop up like this? So we got a few reasons. Like I said, earnings was coming in better than expected. About 80% of the S&P 500 companies that reported, they beat their earnings. Most of them ended up beating their earnings per share estimates by a lot. Okay, EPS, earnings per share, EPS, you'll see that a lot when you trade or investing. You will see EPS, or you'll hear people talk about it. It means earnings per share. This is simply the company's profit divided by how many shares it got. It's going to tell you how much money the company made per share of stock. Are we clear? So whenever a lot of companies are beating estimates, that's fuel for the market. The second reason, right? AI, the spending on AI was not slowing down. Even with the shit that popped off with OpenAI earlier in the week, companies like Google, Microsoft, they was reporting that they are spending very aggressively on AI infrastructure, and the market rewarded them for it. And then the third thing that made this shit pop off in April, there was a lot of hope developing around this Iran situation, and that kept oil from going completely out of control. Yeah. Now, I'm gonna move past Thursday, and we're going to go to Friday. Yesterday. What happened yesterday? This is take profit. This is people taking profit. Yeah, that's people taking profit. Friday brought us Apple's earnings report. Okay, Apple also beat Wall Street second quarter expectations by a significant margin. Driven by strong demand for the iPhone 17 lineup, the stock jumped more than 3% in pre-market, and it held those gains throughout the day. But by the end of Friday, the end of the trading week, this is where the major indexes closed. The NASDAQ crossed $25,000 for the first time, closing at $25,114. That is a new record for them. The S&P 500 closed at 7,230, and SPY closed on Friday at 719. Yeah, so all right. That's pretty much, I'm gonna give you the key names that led this week versus the ones that struggled. So Google, Apple, Tesla. Those are the three Those are three of the Magnificent Seven. They call them the Magnificent Seven because there are seven of the biggest companies in the stock market, and they got the biggest market caps. Now, the seven largest, most influential technology companies are the Magnificent Seven. Now, but they finished the week positive, okay? But the ones that was dragging behind, NVIDIA, Google, NVIDIA actually dropped after Amazon and Google both announced that they got some progress on building their own microchips. They saying, we're going to make our own microchips. We ain't fucking with NVIDIA. That is a competitive threat to NVIDIA's dominance. Does NVIDIA run the game now? Everybody pretty much is coming to them. Google had a mixed earnings reaction, but anyways, on another big story from Friday. Some of y'all got nephews and nieces and kids that play Roblox, right? You want some of that money back from them damn Robux that you be having to buy them? Invest in Roblox. I ain't telling you what to do. This is not financial advice. I'm just saying there's a stock. Roblox dropped 17 to 24% after slashing its full-year guidance. The reason was new child protection measures on the platform, which they very much so fucking needed. Okay? Weirdos. They needed it. Anyways, Roblox dropped 17% over this because they got some age verification requirements. And that created what they call short-term friction, meaning there was fewer users that's going to be able to fully use the platform because they got to be able to do this. They got to be able to break past that age verification requirement. This is a perfect example of something we're going to talk about in today's thesis lesson when I get to that part. JoJo said, add big movers like SanDisk, AMD, Amazon. And again, I talked about Intel last night. That shit went up too. Yeah. All right. Yeah. What you laughing at, Hayden? What's funny? But yeah, that's about it, y'all. That's what happened this week. I just want y'all to know what you should know coming out of this week, though. All right. So the week started with a bunch of records. It dipped Tuesday on OpenAI fears, recovered on Wednesday. Let's zoom back out. Yeah, Intel went bananas. Yeah, it hit new records on Thursday and it finished Friday at the highest level ever seen for the NASDAQ. And yeah, April 2026 was one of the strongest months in the last 5 years, y'all. Earnings season is mostly positive. AI spending is not stopping. Oil prices remain elevated due to this Iran bullshit. And the Fed is on hold for rates. Likely, they might be on hold for the rest of 2026, the way this shit looking. Jerome Powell's term as chair ends May the 15th, and someone named Kevin Warsh has been confirmed as his successor. So the goal is to look at stocks that's been going through something or an issue, then buy their shares. Not necessarily a goal, but that is a strategy, Jay Bandit. Yeah, Intel gapped up like shit. Good shit. Now, I want y'all to pay attention to what to watch next week, okay? Because proper preparation prevents poor performance. And yeah, preparation is not optional. I want you to know something before I give you the calendar. A lot of y'all, okay, a lot of retail traders, I'm talking about the regular people who trade from their laptops and their phone. Every week, they walk into the stock market or they walk into the futures market or the Forex market completely blind. They wake up Monday morning, they check their portfolio, they see something moving and they react. That's not trading, ladies and gentlemen. That is gambling with a brokerage account. So you want to take this shit serious? You want to be a serious trader or a serious investor? Then don't do that. All right. Study the week ahead on Friday or Saturday. A lot of y'all hate Saturdays because you can't trade, but nah, you need to use Saturday to identify key dates and events going forward. Go into the week with a plan. Are we clear? Yeah, we're not doing that no more. Simply, Nell. If you do this one thing, I'm telling y'all, I can lead y'all to the water, but I can't make you drink the shit. I can't. But yeah, if you do this, it'll help you tremendously. All right. Your edge in the stock market is not some dumbass indicator. It's not a mentor. It's not a Discord. Your edge is not your broker. It's not your friend. It ain't nobody. Your edge is preparation. You preparing and discipline. All right. So the person who knows that a major jobs report comes out Friday and is able to position themselves accordingly has a bigger advantage over the person who finds out about it when the market has already moved and they done got in a trade and don't know why the fuck the market is moving against them or even with them. Either way it go, knowledge in advance is power. All right, let's use it. Somebody says I just don't know how to apply to the future, if that makes sense. Well, simply, Nell, you can practice. You can practice paper trading. You know, figure out what's about to happen that week and paper trade it and think. Form a cause and effect thesis. This is why I wanted to show y'all how to form a thesis. Basically, if this happens, I'm going to do this. But if this happens, I'm going to do this. And when the price gets here, I'm going to do that. And if the price gets here and doesn't do this, then I'm going to do that. But if it gets here and do that, I'm going to do like literally a plan. You're not gambling with the plan. You see what I'm saying? Now, the biggest economic event of the week, of this week coming up, is Friday, May the 8th. We have something called the April non-farm payrolls report. The non-farm payrolls is also called the jobs report. It's going to tell us how many jobs the United States economy added or lost during the month of April. But it does not include the farmers. You saw how easy that term was, y'all? They make shit sound so complicated, but it's really not complicated. This is one of the most market moving reports of the month. Every serious trader circles around this date every year. Yeah, a plan and a system. Hood looks good short term, said JoJo, for sure. I agree, JoJo. That takes experience. You should pick a stock you like and study it. Yes, that's true. Now, what to expect on this day, y'all? The current forecast is for about 63,000 jobs that got added in April, which would be significantly down from March's 178,000. The unemployment rate is expected to hold steady at 4.3%. Average hourly earnings are expected to rise 0.3%. And why does this matter? Why do I give a fuck? Because the Feds is watching job reports. They watching jobs data very closely. I told y'all if the Feds cut rates, what that means for the economy. If the jobs are strong, the Feds feel comfortable keeping the rates where they are. If the jobs weaken significantly, it will open the door for them to cut the rates. If we get the rate cuts, that's generally good for the stocks. You see what I'm saying? Thank you for not belittling people for their choices, but setting us up to make better choices. Oh, no, TLC. Hold on. Where my laugh button at? I'm definitely going to belittle the shit out of you if I find out you taking big losses and you over leveraging or, you're not managing your risk. I'm going to talk about your ass. Over here at Ironworth Trading, I'm the type of personal trainer that will smack the honey bun out your hand. I'm going to tell you about yourself. You want to lose weight, but you sitting up there eating that big ass plate. You want to lose weight, but you keep stuffing your face. You want to lose weight, but you won't walk any place. Like I'm that type of, mentor, teacher. Like, you know better. You know you don't want to lose no money, right? But you don't accept taking a small loss. I'm not finna sugarcoat shit. Let me ask y'all a question and I'm gonna move forward. Would you rather have, and don't say neither, would you rather have chocolate flavored shit or shit flavored chocolate? Hey, if I was never selling it to you, and you're not invited. If your name is If, this is like Harvard, buddy. Everybody can't get in. You see what I'm saying? And it's not Burger King. You can't have it your way. He said, I'm playing. It's all good. I'm talking shit too. I'm talking shit too. And if your ass ever did want to, it'd be $30,000 for you. Yeah, it'd be 30,000 just because you said that shit. Now, anyways, now back to what I was saying before I was interrupted. Right, this week, Wednesday, May 6th, we're going to get the ISM services. It's called PMI. This is going to measure the health of service businesses like some of y'all work in restaurants, some of y'all work in hotels, healthcare, finance. This is going to bring something called the JOLTS report this week. That stands for Job Openings and Labor Turnover Survey. That tells us how many job openings exist in the country, and ADP employment change comes Wednesday as well. This is a private estimate of jobs added. You know, they pay attention to that too. That usually previews Friday's official report. These are not just numbers that I'm telling y'all about. Each one of those that I just told y'all about is going to tell you a piece of the story about whether the economy is strong or whether shit is slowing down. And right now, with oil being as elevated as it is and the Fed's on hold, every data point is going to carry extra weight. Mark my words. Mark my words. Now, I want y'all to pay attention to, because this is a massive earnings week. All right. Palantir Technologies report earnings on Monday, May 4th. Palantir got earnings coming out. How many of y'all own Palantir? How many of y'all ever made money off Palantir? Drop a W in the chat or say me. How many of y'all saw Palantir when it was $5? You want my thoughts on Oracle? If I wish they leave TikTok the fuck alone. Bring back the old TikTok, Oracle. Look at all these people that made money off PLTR. You know what I'm saying? Yeah, y'all. So y'all know Palantir. You better pay. Y'all know to pay attention to Palantir. So this is an AI and a data analytics company with deep government and defense contracts. It's a unicorn because it's in two sectors at one time. Damn near. It's in the defense sector and it's in the technology sector. No, I know you're talking about the stock Oracle. The stock Oracle is the company Oracle, and they own the rights to TikTok, if I'm not mistaken. BBAI is a slow snail, but I do like the concept of the company. But the stock itself, be careful with that shit. That's all I'm gonna say. For now, I'm not saying they won't shoot the fuck up out of nowhere, but don't be amazed if you get in and it dropped $2 on you and stay there for the rest of the year. Now, IWM is cool to trade for a beginner, Denise. Like, you know, if you're just getting started, you know, you should probably start out trading options on IWM. Yeah, but their business is way bigger than just about TikTok. No, if you asked me what were my thoughts on Oracle, I didn't give you any thoughts on the stock per se. I just gave you my thoughts on the company. I like to trade companies I actually like. Anyways, Palantir, right? With the military using AI in this Iran conflict is what we'll call it, because they don't even feel like a war. But yeah, with them using AI in the middle of it, Palantir is in the spotlight. So y'all might want to watch this one closely. All right, AMD, Advanced Micro Devices. Somebody said, where do you see the S&P 500 at after Trump's done in office? I don't know what you mean by that question. Yes, PLTR, Palantir. Somebody says, I rebuke Palantir. So yeah, Palantir. But now we're gonna move forward to AMD though. Advanced Micro Devices, AMD. They got reports coming out on Tuesday, May the 5th. AMD, they make chips that compete directly with NVIDIA, right? So given that NVIDIA got pressure this week from companies building their own microchips, AMD's report could shift the semiconductor narrative significantly. All right, we got McDonald's, Shopify, Uber, and PayPal all reporting during the week. These are not AI names, they are consumer and commerce names, but they still gonna tell us whether the regular American consumer is spending a lot of money on, despite the elevated gas prices at the pump And no matter how inflated shit is right now, that's what we're going to find out. Palantir is overvalued by quantum computing stock, says if. Jazzy says AMD is Bay. Real talk. Clock that T, Jazzy. Elevate Essential says morning. Great info. Thank you. I appreciate that. So yeah, we what else we got? I told y'all about McDonald's, Shopify, Uber, PayPal. Oh, ARM Holdings. ARM. This is a chip design company that licenses their architecture to nearly every smartphone chip manufacturer. SOXL ETF, is it too high? That question can only be answered in hindsight. And what taught me that, Ed, was Netflix in the year 2022 or 2023. I was happy it went from like 100 and some change to like $200 to $300 and some change. And I'm thinking like, is Netflix too high? Is this too high? That shit went to $1,500 in 2025. So be careful looking at a stock like, is this too high? Your response to people in voice is so soothing. Oh, Denise, thank you so much. When people do that to me, you make me want to make it more soothing. Somebody else told me I need to do audiobooks. So if y'all got a book and y'all want my voice to, y'all want me to read it, I will happily. It would be an honor. It's my pleasure. I would love to read your book for you. All right, just inbox me. Serious inquiries only. Did that help you, Ed? Or are you saying thanks, or are you asking me to look up something called TKS? Hella Dog says Qualcomm. Y'all asking me about stocks. Hold on, y'all. Y'all fucking up my curriculum. Can I buy a share at any price? Yes, you can. Y'all save your questions till the end of the show. You finna feel me. I don't know what the fuck you talking about, if. And Ed says thanks. Okay, you're welcome. Now, we got ARM Holdings. I'm telling y'all, I told y'all what ARM do. They basically share their architecture for how to build they chips. And they sell this to damn near every smartphone chip manufacturer. All right. So they got reports coming out this week as well. ARM. This is one of the quiet forces behind the entire AI and mobile revolution. So don't sleep on it. Add it to your watch list. If I tell you about it, then you ain't never heard of it. It ain't nothing to ignore. Coinbase have reports coming out. That's going to give us a real look at the state of crypto activity and whether there's a lot of retail engagement with those digital assets and if it's growing or not. If you are a crypto bro or you are a crypto lady, y'all like crypto, let me know. Drop something in the chat to let me know you fuck with crypto. I want to see how many of y'all in here like crypto. Thoughts on SoFi, please. SoFi at $30 in the next 2 years is what I would like to see, Jennifer. I'm bullish on SoFi. A lot of y'all like crypto. I see some Crips in the chat. You know what I'm saying? Somebody said they like crypto. Crypto, me. Okay, cool. Somebody says, I love crypto. God Lord knows I do. But I beat them dead before I let them. What she say? What did it say on The Color Purple? Anyways, y'all, my bad. I get a little distracted sometimes. My bad. So look. All right, Coinbase. That's going to give us an idea. So y'all pay attention because Coinbase coming out with their reports this week. All y'all that love crypto. Also, Coinbase is at a great level because when Bitcoin do start to fully recover and break back to all-time highs, Coinbase will as well. All right. Now, Disney reports this week. Disney. How many of y'all, where y'all Disney Channel kids at? Everybody love Disney. Do you own any Disney? MICKEYMOUSE Face Eye. Who remember that shit? That's the old Mickey Mouse Clubhouse show. I ain't talking about that Mishka Mickey Mouse bullshit. I'm talking about the black and white Mickey Mouse Clubhouse. All right, I'm a real OG Disney Channel kid. You hear me? My brother, put it on Nickelodeon. My sister, put it on Cartoon Network. No, we watching Lizzie McGuire today. Okay, we watching Bear in the Big Blue House this morning, dog. We not finna watch Cat Dog, moment, little Cat Dog. We not watching that shit, y'all. It's Saturday morning. All right, so y'all know I got a remnants, on the happy days. Come on, let's get that GOAT goal for our host. Thank you. I appreciate that, JoJo. Man, you must be in your 40s. 40s is crazy, the mobile trader. I'm in my early 30s. I don't know what you talking about. Look, and I'll be 35 this year, so I am not saying mid 30s until I hit that date. You know what I'm saying? But yeah, I'm in my early 30s, but truthfully, I am the same age as water. I am ancient. I have an old soul, okay? You can't put a date. How old is water? You can't tell me how old is water, right? And don't try to put no date on me. So I'm in my 40s. 40s is crazy work. No, ain't nothing wrong with being in 40 though. Thank you, JoJo. I got distracted y'all again. When I get like that, y'all better say, come on, bro, get back to the class, because I'll sit here and kick it with y'all. We the same age. You got a year on me. Yeah. October 30th, 1991, y'all. Yeah. I'll be 35 this year, the day before Halloween. Scorpios unite. Anyways, Disney come out. Disney is going to give us data on theme park attendance, streaming subscriber numbers, content performance. Given that gas prices have been so high and y'all, people wallets is being squeezed, Disney's numbers will be a window into whether people are still spending on entertainment. Guess what? They is. People still paying for their Netflix account and shit. Gas prices ain't finna stop y'all from watching Netflix. So do I check for businesses that have their reports coming out? There will be a lot of volatility. You still got milk behind you. Oh no, hell no. What? Y'all done up and done it. No, I don't. All right. So Saturday, May the 2nd, which is today, y'all, Berkshire Hathaway, they got their annual shareholder meeting happening in Omaha, Nebraska. Now, this is Warren Buffett's company. Y'all know who Warren Buffett is. This is a older guy. I think he got most of his wealth after the age of 60, if I ain't mistaken, for all you older people who can make excuses and shit, okay? I can name about 10 millionaires, billionaires that got rich after the age of 60. So it's never too late for y'all. Good morning, eclectic one. So yeah, it's never too late for y'all. But anyways, Warren Buffett, one of the best investors of our time. That's his company, Berkshire Hathaway. Berkshire does not trade actively, but Buffett's commentary on the economy, on cash positions, on market conditions has always been significant for long-term investors. We give a fuck about what Warren Buffett says. I want you to read the headlines from that meeting today, y'all. All right. Thank you. I'm 51 and hopeful. Yeah, JQ, you don't got to be hopeful. There's more than hope there for you. You know what I'm saying? You know the story of Pandora's box? How she let out everything, all hell broke loose. By the time the box was closed, the only thing that was left was hope. You know what I'm saying? So I don't even like hope. You got it. And you got to keep hope. You got to keep hope alive. But I'm just saying, I like to know. I like guarantees. I don't like to hope. I like to know. But you got to have hope, though. I ain't wrong. I don't want to say, screw hope altogether because, sometimes hope will keep you alive. Hope will get you through there. If you didn't have hope, you wouldn't even be here. You feel me? So I'm appreciative of it. Now, I want y'all to watch this. So anyways, how do we use this information before the week start? What I want y'all to do this weekend, I want y'all to get a notebook, maybe use your phone. I don't care. Open up a note on your phone, whatever. But you need to write down these key events, right? And next to each event, you need to write down what you think the market reaction is going to be in a positive scenario and in a negative scenario, okay? For examples, if the job report comes out and is much stronger than expected on Friday, what happens? Money may rotate out of bonds and go into stocks because strong jobs mean a strong economy. Or on the flip side of that, strong jobs could mean that the Fed stay on hold longer, which could cause a small pullback. Both of these outcomes are possible. Your duty is to think through them in advance. Let's make it simple. Is it going to go up or is it going to go down? If it go up, I'm going to do this. But if it go down, I'm going to do that. It's just simple, y'all. You have to form a thesis. Okay? This is the beginning of thesis formation. This is exactly what I'm about to spend a few minutes on. I got to make sure that y'all know, like, what is a trading thesis? Why does it matter, y'all? What does thesis mean? A thesis is simply your reasoned argument for why a trade should work. Okay? It is your answer to the question, why am I entering this trade? What do I expect to happen? And what does it need for me to stay in it versus what needs to happen for me to get out of it? Without that, you're gambling. You're gambling. I want y'all to think about this like a court case. I know some of y'all ain't never been to jail or been to court, whatever. But think about you done seen Judge Judy or Law and Order or something. But in a court case, the lawyer does not walk into the room and say, I feel like my client is innocent. I got hope. Right? They walk in with evidence. They walk in with facts and with a timeline and with a witness. They have a case. They can argue it. They can defend it. And if new evidence pop up out of no fucking where that contradict their case, guess what a good lawyer gonna do? They're not gonna stick with the old plan. They will adjust. Y'all get where are y'all picking up what I'm laying down? Y'all let me know so I'm not just rambling. Let me know. Let me know. Let me know. If y'all don't let me know, I'm gonna keep fucking singing. Y'all ain't see nobody let them. Somebody said love that. Okay, cool. So look, a lot of beginners, they walk into trades, right? They walk into trades the way a bad lawyer walk into court with nothing but a feeling. The stock looked like it was going up. Somebody in a group chat said it was gonna run. I had a good feeling about it. That's not a fucking thesis. That's that hope again. Y'all feel me? Hope is not a strategy. Hope is not a strategy. A proper thesis has several parts. First, you need to know what the setup is. Second, you need to know why that setup is valid right now. The third thing, you need to know what your entry point is and why you chose it. Right? You need to know exactly where your stop loss is. Let me clear my throat. Yeah, the stop loss is the part that a stop loss, for those that don't know, because I know it sounds like I'm speaking Chinese by saying those words. It's foreign language to you. You just don't use it, do you? You don't use it, do you? The stop loss, ladies and gentlemen, that is the price where you exit if you are wrong. I'll say it again, because it should exist. There should be a price where you exit if you are wrong. Some of y'all hold the losses so long, lose 100% of everything you put in it, and then you get the hell out of a winning trade so fast. You don't get to make a lot of money because you're so scared you're going to lose money because you done lost money. Now you traumatized. You got PTSD, post-trade stress, post-trade stress disorder. You fucked up from the last trades you took, and you just cut from taking losses. But you can be. This is healing for you. We don't hope, we plan and execute. That's right. The power of execution, the mobile trader. You describe me getting in my own way. Yeah, it's you versus you, KB. And you literally have the power to put an end to the shit. You don't have to go through it. Did I hit 9K followers just now? I don't know. I think I just hit 9,000 followers. Hey, y'all, if y'all haven't hit the follow button yet, I'm very close to hitting 9,000 followers. I would gladly appreciate it if y'all did that for the kitty. Hit that follow button so I can meet this quota, you know what I'm saying, that I set for myself. I'm really looking to get to 10K followers. That would be awesome. I'm obviously going to hit that this year. Okay, so after we find a company that have the reports out, what do we do? I'm telling you now what to do, Bandit. I'm telling you, a proper thesis has several parts. You need to know what the setup is, why the setup is valid, where you gonna get in at, why you chose it. Now I got the hiccups. You need to know where you gonna get out at if it go the wrong way. You need to know where you gonna get out at if it go the right way. All right. Where do you expect the stock to go if you are right? And then you need to know what would invalidate your whole thesis. What would make everything you thought completely wrong? Like, okay, I was wrong. What could happen that would tell you that the setup is no longer valid? And if you cannot answer all of these questions before you enter a trade, my friend, you are not ready to trade. Yep, I said it. I know. And if you trade still without knowing that shit, what I just told you, don't be surprised at the results. Y'all know what happened when you play stupid games? Can somebody in the chat tell me and tell everybody else what happens when you play stupid games? Yeah, you lose money. You get stupid prizes. Yeah, but you got all the indicators, so you ain't really helping people. Fry, this is just guessing. Potter stock trading. So maybe you're not here, Potter stock, every other day. I do full on beginner master classes usually. Usually I'm just on here teaching a bunch of kindergartner, preschooler, head start level traders. Okay. So today wasn't one of those days. Today was for my intermediate people. All right. So yeah, I got some indicators on here that I haven't taught you. Maybe you want to know what the EMAs are. Maybe you want to know what the MACD is. Maybe you want to know how to use RSI and MACD together, or maybe you don't know what volume is. Whatever, right? Maybe you don't know how to read price action. Hell, maybe you don't know how to read a candlestick chart. But today is not the day where I teach those things. Come back tomorrow. You might catch me on, teaching a beginner class. All right. So Potter stock trading, I don't get what you mean. He's saying that I'm not really helping people. Can y'all, if I'm helping you, can y'all let Potter stock trading know if I'm helping you or not? And Potter stock trading, I want you to pay very close attention to the chat. Okay. If I've helped you in this live stream today, could y'all please let Potter stock trading know? Yes or no. Say whatever you want to know. But Potter stock trading, please pay close attention to the comment section. All right. You see that? Potter stock trading? Thank y'all for helping me. I appreciate that. No, you can't please everyone, but everyone pleases me. Okay. The fact that y'all just showed up for me like that. Listen, if I could clock T, I would, but it just feel weird. So I ain't doing that shit, right? I ain't doing that. But I wish my sister then was here right now. You feel me? But y'all clock the T for me. Y'all clock the T for me. You feel me? Nah, anyways, y'all. Thank y'all. Appreciate that. I love y'all so much. This is a strong community right here. I love it. Now, back to what I was saying. Because if y'all don't do all that, you ain't ready to trade. Now, back testing. What is back testing? And why is it the foundation? What is back testing and why is it the foundation? Before I teach y'all how to build a thesis, I need to teach you how to know whether your thesis has a legitimate track record. That's what back testing is. You feel me? Back testing means you're going to go back and you're going to look at the historical. You're going to go back through historical chart data. We're going to go back. I'm looking backwards. I want to know what happened in the past. Let me take all this off real quick. I want to know what happened in the past. Sometimes you do have to look left. You have to look in the past. You got to look back to know what happened. The same thing with life. Sometimes you got to look back, reminisce, go over, so that you don't make the same mistakes again, or you learn from those lessons in the past, and it helps you make better decisions in the future. That's why back testing is important. Your pattern or your signal, you need to go back and look through it, right? And see if it has actually worked in the past. You are asking the question, if I had traded this setup over the last 100 times it appeared, what would have happened? When I see this head and shoulders pattern starting to form, what happened the last 10 times a head and shoulders pattern started to form? I said a head and pattern. Good God. Let me see. Right. So some people don't like to back test. They don't back test. Monday morning come, They get right into the market. Hell, the weekend happened. The whole week will go by. The whole month will go by. And they did absolutely no back testing. They didn't go back and look at all. They didn't go back and see shit. And they don't understand why today is really pretty much the effect of the cause. Today is the reaction to the action. Like, what happened today could be based off what the fuck happened last week. We could be filling a gap. And you didn't even pay attention to the gap. So you missed it. You missed that opportunity to have a grade A setup because you wasn't paying attention to here in the past where the price gapped up like that. So you didn't know that when we got here, we probably pretty much finna come back down to this level to fill this gap. Just a simple 5 minute, take 5 minutes of your day to look back and make $5,000 if you know, in the right position. Now, I want y'all to hold on to this analogy. If you was going to open a restaurant, right? And you was trying to decide whether to put a new dish on the menu, all right, you're not just going to cook it once, like it, and put it on the menu. You need to make it multiple times. You would refine the recipe. You're going to have other people taste it, test it under different conditions and shit, right? You might even cook it in a different kitchen, use different ingredients, different customers. That type of testing process is going to tell you whether the dish is actually good or if it was just lucky for the first time. You know what I'm saying? So trading is the same way. You cannot take a setup live, right? Not paper trading. You do whatever the hell you want paper trading, but you can't take a setup live with real money after seeing it work one time. One time is luck. Cool, you made money in the stock market. Now you think you know what the fuck you doing. One time is luck. Hell, maybe even 2-3 times is luck, but 100 times is data. When you back test, when you do some back testing, you are building data. You are testing your recipe before you put it on the menu. Okay? Back testing is important. It is very important. Now, how do you back test? I'm going to walk y'all through how I actually do it, right? I'm going to give you the process that I use. So you can walk away with this live stream, from this live stream, with more than what you came to it with. I'm going to get to that part, Ed. So look, the first thing you do is you choose a specific setup to test. Let's say you want to see if the opening range breakout strategy works. You've heard about some opening range strategy where you wait when the market first open and you put it on a 15-minute chart, and that first candlestick, when it stopped moving after 15 minutes, you go down to a 5-minute time frame and you want to look for the price to break out of this range, and you're going to go with that direction. So you want to look in the past to see if this shit actually worked. You got to choose a specific setup to test. You can't test everything at once. You need to pick one specific pattern or a signal. Let's say you like, oh, I want to see what happened every time there was a bullish continuation pattern. Did it really continue to be bullish? Let's say you want to test what happens when a stock breaks out above a resistance level. The price where it has been rejected multiple times. Okay, that's resistance on above average volume. So that is a specific defined setup. You want to write it down exactly. If you cannot write down your setup in 2-3 sentences, y'all, you do not know your setup well enough to take it. Number 2, you're going to go to your charting platform. Some people use TradingView. Some people use Webull. Some people use Robinhood. If you're using Robinhood, I recommend you get on the desktop and learn Robinhood Legend. Some people use Thinkorswim. You have options. Pull up a stock chart. Set the chart to the time frame you want to trade on. I recommend you learn top-down analysis. You need to learn when in doubt, you zoom the fuck out. If you're a day trader, 5-minute, 15-minute, you using the 1 minute for an entry to pull the trigger, but you making decisions on the 5 to 15, maybe even the 30. But if you're a swing trader, you're going to hold positions for days or for weeks. You might be on a 4-hour or a daily or a weekly chart. All right, so scroll back in time. That's what you want to do. Step 3, scroll back in time. You're going to go back to at least 6 months of data, sometimes a whole year. You want to see your setup in different market conditions. You want to see it in a bull market, whether the overall market is going up. You want to see it in a period of sideways, when it's consolidating, basically when the market ain't going nowhere. And ideally, you want to see it in a bear market or a correction, whenever the prices is falling. I want to see how this shit work in a bear market. So a setup that only works when everything is going up is not a reliable setup. But a setup that work across different conditions is something that you can build a real strategy around. I like super trend too, JoJo. All right, so the fourth thing, every time you see your setup appear, every single time, just mark it on the chart, highlight it. Same way I highlighted this fair value gap, you can highlight whenever you see that pattern. Highlight it. All right. You know why you want to highlight it? You want to write down the date, the stock, the entry price, where the stop loss would have been, where the target would have been, and the results. Did it hit your target first? Did it hit your stop loss first? Did it go sideways? Do neither? All right. And then you want to count your results. Out of all the times you found your setup, how many times was it a winner? How many times was it a loser? That's going to give you your win rate. And your win rate alone is not enough. You also need to calculate your average winner versus your average loser. I'm going to say that part. I'm going to slow down on that part. Because I think I just started rambling. Let me slow down. If you win 60% of the time, but your winners are small and your losers are huge, that setup is actually a losing strategy. All right. The real number you need to know, y'all, is your risk to reward ratio, your reward to risk ratio. If your average winner is $2 per share and your average loser is $1 per share, that is a 2-to-1 risk to reward. That means even if you only win 40% of the time, you still making money. That is the math of survival in trading. You should be able to lose 7 times in a row and then win 3 times in a row. And even though you lost 7 times and only won 3 times, the winners outweigh the losers. If every time you take a loss, it's a big loss, and every time you win some money, it ain't more than what you lost, you fucking up your risk to reward ratio. If you keep your losses small, listen to me closely. If you just accept the losing trade, okay, I'm down 2%. Let me get out, because that 2% loss is only going to get bigger. It's only small losses only get bigger. They don't grow. They don't shrink. A small loss is not going to shrink. You think it's going to go back? You think it's going to go back the right way? Okay, whatever. All right, whatever. You know, how do you come up with that? Well, you know how much you're willing to risk. And it ain't even, some people be like, oh, well, I can afford to lose this much. I don't mind losing this much. That can only get you so far, though, beloved. After a certain amount of time, that shit will affect you. It might not affect you now, but why would you want to do it until it does? If you get out of the trade while it's a small loss and only take small losses, I've seen it happen too many times. What's going to happen is you're going to lose a lot, and then 2 or 3 trades is going to wipe out all of the losses, and you'll walk away profitable. That is the proper way to do this shit. At that point, you can trade with one hand tied behind your back, blindfolded, because you are managing your risk and you taking small losses and you minimizing your losses, you maximizing your gains. Now, the 6th thing you want to do, you want to look for patterns in your losses. Look for patterns in your losses, because if you're not journaling, you won't see no patterns in your losses. You don't even got to journal. Just go back and look at your trades. That's back testing too. Going back and looking at your trades throughout the week, throughout the month, that's back testing. But a lot of people skip that. And that's one of the most valuable, that's a valuable part. Like when your setup failed, you need to go back and figure out what was happening around it. Do y'all want to make money or not? Like, it's this simple. Do you want to make money, make yourself or not? Otherwise, I know, I don't want to say it. I really don't. Thank you for telling me I'm amazing. I appreciate that. Yeah. So you want to make the money, like make it make sense. All right. When your setup failed, what happened? Was the overall market down that day? Was it some major news event that came out that changed everything? Did the stock gap through your stop loss overnight so you ain't get a chance to get out? See, them type of patterns, I ain't even gonna call them bad patterns, but those patterns in your losses is gonna tell you when not to take your setup. They're gonna give you what is called a filter. You need certain conditions that have to be present in order for your setup to be there and for you to have the best chance of it working, for it to be a grade A setup. Do you want to make money or not? Okay. Great pep talk, sir. I hope it's working, Journey. Because I can pep talk them all day long, but the power of execution, okay, knowledge is not power. Applied knowledge is power. You have to actually apply this information, okay? But listen, when you pay attention to when you look at your fuck ups and you learn from your losses, the losses become lessons. People skip that part, but when you do that, what happens is it gives you a filter. It's going to every time you see this from now on, you're not going to trade. This is going to tell you when not to trade. Knowing when not to trade is valuable. Now, I'm going to walk y'all through a specific example so that it's not abstract. I want y'all to notice that every time there's major earnings and they beat them, like a Magnificent Seven company, the stock will gap up at the opening the next day. You want to trade that gap, right? Now, you could blindly buy any stock that gaps up after earnings. Cool, that would be sloppy. Instead, you build a thesis. You're going to say, all right, whenever this company got earnings, all right, whenever they beat earnings by at least 10% versus what Wall Street said, the company also raises their forward guidance to stock gap up at the opening. And then they continue to go higher for about 30 minutes to an hour. So since I know that, I'm going to check the thesis against this week. I'm going to say Google beat the earnings and they raised guidance. The broad market was positive. And yes, Google closed at an all-time high that day. Apple beat earnings. Broad market was up. Apple gapped up over 3% and it held. Does the thesis hold? So far, yes. But now I'm going to test where the thesis break down at. Western Digital also beat earnings this week, but the stock dropped over 8%. Why? Because the stock had already ran significantly in the weeks leading up to the report. It was something called priced in. A lot of time, the shit be priced in. Priced in just means we already know about that. We don't care. The market is not going to move on some shit that we already done priced in. The market had already priced in great earnings reports. So when it came true, there was nothing left to buy. This is called buy the rumor, sell the news. Y'all going to hear a lot of people tell you to buy the rumor, sell the news. One of the most important concepts in trading. So the thesis that works for a fresh setup with room to run does not work the same on a stock that is already parabolic. Parabolic means this shit already went crazy. It has already went straight up in a short amount of time. It took the elevator up. But y'all, this is why back testing matters. Because if you had a back tested the earnings beat gap up thesis properly, if you had tested this gap up on earnings thesis that I just told you, you would have noticed that it tends to fail whenever the stock is already extended. All right. That just means it's far above its average price. You would have added that as a filter. You would say, I'm only going to take this setup whenever the stock has not already ran more than 20% in the last month. Do y'all see how much fucking thought goes into this? It's not just pressing buy. It's not just pressing sell. It's not just buying a call. It's not just buying a put. There's thought that goes into it. But a lot of people just think they finna press buttons and shit. You're gambling. You might as well go to a casino and pull a lever on a slot machine or say hit me. You know what I'm saying? Or bet on Black 19 or some shit, the roulette table. I never play earnings, but I get this. Yeah, KB. You feel me? But even if it ain't earnings though, like any back testing is just important. Yo, back testing how you trade and the stock. But anyways, I'm gonna move forward. I think I'm getting back test thesis crazy on y'all, and I don't want to do that. All right. I just wanted to make sure I stay on point. Trading is 90% psychological. So of course I'm going to stay on the mental side of this. It's 10% technical analysis, but I will be doing you a disservice if I only gave you the technical process. You see what I'm saying? The reason most people do not back test is not because they don't have time. It's because back testing is slow, it's boring, it humbles you. When you go back through 100 When you go when you when you go back through 100 examples of a setup and find out that that your hit rate is only 45%, it's uncomfortable. It hurts people to see how bad they are at trading, and it would only make them better to see where they fucking up at. But yeah, it's like watching it's like you play football and you watching film and you done fumbled the ball, you didn't do interceptions, you didn't do well that game. But you should be watching the tape to get better. But a lot of traders would rather feel confident in the moment than actually do the uncomfortable work of discovering the truth. But not y'all, not my Ironworth traders. I know y'all understand. You know what I'm saying? Y'all get it. Your feelings about a trade are not data. They have never been data. Your emotions are a product of your current mood and your recent wins or losses. If you've been losing a lot, you gonna act like it. If you need money real bad, you living paycheck to paycheck, your financial stress, you gonna trade like it. Your ego big, you gonna trade like it. What you last saw on TikTok can affect your fucking trade. So that's what you using when you trade without a thesis. Everything I just named, you are trading your mood. And the market don't give two fucks about your mood. The market will take your money. Actually, you're going to give it to the market because the market ain't never took shit from you. But anyways, it will take money from a confident person just as fast as it take money from a scared person. All right. Especially if neither one of them has tested or have a tested reason for even being in the trade. So again, a thesis is not a guarantee. Let me be clear about that. Even the best thesis is going to lose sometimes. That is the nature of trading. You operating in a probabilistic world. Okay, so no setup is going to work 100% of the time anyways. But if you have a tested thesis, that's going to give you an edge. And if you got an edge, right, and you apply that consistently over 100 trades, over hundreds of trades, that's going to automatically build wealth. So it's safe to say that this is wealth building information. See, the trader who says, I back tested this setup over 100 examples, it wins 58% of the time with an average of 2 to 5 to 1 ratio, risk to reward ratio. And my current trade fits all the criteria, so I'm going to get in. See, that trader is in a completely different position from the trader who says, I think this is going to run. All right, one of them has a job, the other one has a habit. I got so much more to tell y'all, but yeah, it's time for me to go to the gym. I got to go to the gym. I'll catch y'all this afternoon if y'all still here. Matter of fact, it might even be later on tonight. Meet me back here tonight if y'all want to see. Probably like around 10 Eastern time, 11 Eastern time. But before I close out, I want to open the floor. What questions do you have? There's no such thing as a bad question in this room. The only bad question is the one you was too afraid to ask and then made a mistake because you did not know the answer. So ask it now. Ask it now. I got homework for y'all too. I got some weekend homework. Y'all ready? Y'all got to pull up a chart of any stock that y'all been watching. I want y'all to go back 6 months. And I want you to find every example of your favorite setup. Maybe you don't have a setup. I need you to inbox me so I can get you together. You may need help, way more help than what I knew. Okay, so just inbox me and you don't got to say nothing. Just inbox me. Don't nobody even got to know you inboxed me. You are so informative. Thanks for your time. You're welcome, Chuck. I'm filling out my application at JP Morgan now, says Aaron. I know that's right. When are you live for a beginner session? I'll do that tomorrow. So all the beginners, tomorrow will be a beginner's masterclass. Be sure to hit the follow button, and yeah. And if you're interested in 1v1s, inbox me your name and your number and the best time to call. I'll reach out to you. AMD, what do you think on earnings? Tony Montana, AMD, I think that first of all, that's NVIDIA's competition. NVIDIA got some even more competition because companies like Amazon and Google and shit, they talking about making their own microchips and not going to NVIDIA. So I think AMD would have an opportunity to make more money too. That's just my thoughts. I think they're going to earn more money. I think they're going to beat their earnings. How do I inbox? Ed Com, don't worry about it. I'll reach out to you as soon as the live is over with. And Jay Bandit, okay, I'm gonna wait for you to inbox me as well. So yeah, like I said, y'all, and there's 3 people right there. So the 1v1s are limited. Okay. So if you are serious, inbox me as soon as possible because my time is limited. I don't sell my time. My time is not for sale. My services are, but my time is valuable, so it is not for sale. I only got like 5 slots for the 1v1s left. If you are interested in that, inbox me. But yeah, other than that, y'all, that's your homework. Did y'all remember what I just told y'all to do? Pull up a chart this weekend, go back 6 months, and find every example of your favorite setup. I'm talking about what you have been trading or whatever you want to trade. I need you to document at least 10 examples. Win or loss. Where you get in, where you got in, where you stop, all of that. Bring those results with you. Pay attention to them. Learn from them. Let me know when you get it done too. Be like, hey, I did the homework. I'm gonna tell you what to do with it. Because the second thing, you need to write down your 2 scenario thesis for what is going to happen throughout the day. Which means, hey, if it goes up, if it gets here, I'm gonna do this. If it go up, I'm gonna do this. If it do, I'm gonna get out here. If it go, you understand? I'm gonna give you an example. If the price of a stock is at $100, and I think it's finna go up to 110, shit, I know that by the time it get to 105, I'm taking profit. I'm taking profit at 110. I'm gonna leave one running in case it go to 115. But if at any moment this shit get down to $98.50, I'm gonna get out the trade. I have a plan for if it goes the wrong way. I got a plan for if it goes the right way. Y'all with me? Does that make sense? That was a lesson for today. All right. Y'all make today twice as good as yesterday and half as good as tomorrow. Y'all been a wonderful audience, I swear. A wonderful audience. Okay. All right, y'all. Have a great day.